Deal 2. First one was January of 2007. The next one's March 2007. Secured loan for a mobile home. The brilliance of what has taken place with David G. is it's step by step by step. It's not, as I mentioned earlier, the magical bullet that hit the one transaction. Somebody made the $1 million in their first transaction. This is just good fundamental real estate. Okay, David G. used most of his Roth funds, if you're keeping track of the funds, buy the land in 2007. Okay, so he didn't have much money left in his account. David made a $2,000 contribution to facilitate the Roth IRA to need for capital to make the loan. He was allowed to make up the $4,000 contribution in 2007, but he only put $2,000 in. David decided to once again partner with his Roth IRA, with his wife's Roth IRA, to fund the loan. And the question is, you may be asking, well, why partner? Well, both husband and wife have small balances in their Roths, and they both had a desire to build up their accounts. Okay, so the strategy is, just remember, at the time of acquisition, his IRA and your IRA can partner with anyone, including a prohibited person, as long as it's done at the time of acquisition. And since both of his account and his wife's account had small balances, partnering is a good strategy to help build up both accounts. And I mentioned earlier a Coverdell and a education account and a health savings account. The same strategy is employed over and over again in our office for other accounts that have low contribution limits and thus have smaller balances. For example, the Coverdell education account and the health savings account. We have had clients who have had as many as 7 different vestings on a piece of real estate, utilizing health savings accounts, their IRAs, their education account, and their business type of accounts, such as a SEP. So it's a very good way to build up a small account. Now, how does David G. find these deals? The first one I probably don't recall mentioning it, but it was simply became aware of that lot by his normal prospecting that the first one took place. Now, the other one is, the question always comes up, well, how do I find deals? Okay. Well, David G. became aware of this loan opportunity from a landscaper that had done some business that he had on his non-IRA properties. They mentioned he needed a loan to get a used mobile home that the banks were unwilling to lend on. Lenders generally do not like to finance older mobile homes. So what he did is he said, well, he called our office, can I make a loan on a mobile home? Absolutely, that's one of the things you can do. The loan amount was $4,000 secured by a 1985 Oakwood, located in a mobile home park. The interest on the loan was 18%, payable at $101.57 monthly for 60 months. Total profit based on the 50% ownership was $1,047 for that 60 months. Now, where else can you find a place you can put $4,000 in this economy, that economy in 2007, that's going to pay you 18% on $4,000? This was a good way for him to get some money invested that is actually earning some money. And as a side note, this guy's paid on time perfectly. The loan terms were set out by David G. and his borrower, not American IRA. American IRA's role is a third-party administrator and not an advisor. So we're not going to negotiate the terms for you. You are going to tell us what the terms are, and then we're going to follow your directions. As part of the terms, the borrower paid all closing costs. Now, the closing costs in this case were nominal, but I made it sound like there was more to it than what it is. But keeping in mind that when you're doing loans, the legal, title, recording, certified mail fees, and American IRA fees, we charge fees, annual fees for our services, and there are costs and transaction fees that are applicable to an asset purchase. Well, this is not a requirement, but it's just good business. Think about it. If you get a loan from the bank, do they pay your fees? Not usually. So why should your IRA? Your IRA is the bank in this situation, and your borrower should pay the costs. And that is totally your decision whether you want to do that. Not ours. But it is something that you may want to consider when you're negotiating with a potential borrower to make a loan. I went back through this because I wanted to make sure that we tie in the first portion of this that says how to make a transaction and what's going on. David G. notified American IRA by submitting a letter of direction which outlined the terms and the participants. It's important that we know who is going to be involved. The IRA team with David, actually the IRA team helped David fill out the form. He happens to be local to our office, and we also do that by phone and fax, and any other time you may need some help with these forms, we're here to help you. David G. reviewed all the final documents, approved them, instructed American IRA to sign them on behalf of the Roth. And then American IRA signed all the documents. David G. does not sign any documents on behalf of your IRA. I'm going to repeat that. David G. does not sign any documents on behalf of his Roth IRA. The reason that this is important is if you don't remember anything else about this transaction, you're thinking about doing self-directed IRA investing, all you have to do is remember, don't sign anything that has to do with the asset ownership. Instruct American IRA to do it for you, and you won't get yourself into this situation, which is you sign a purchase contract, try to close on it, it's in the wrong name, wrong insurance, wrong title insurance, and you have an invalid contract because you can't legally bind your IRA, and it needs to be in the name of the IRA when you make the purchase. So just remember that, and you're going to be 99% ahead of, let's just say, much of what is being taught out there as far as the emphasis on the signatory and the simplicity of the process. The process is only simple if you follow the process. The vesting of the note is, as I've told you before, American IRA LLC for the benefit of David G. Roth IRA, undivided 50%. Mrs. David G., undivided 50%. The original note is sent to American IRA LLC and placed in a fireproof safe. And when the note is paid off, Mr. and Mrs. David G. will give a letter of direction to American IRA to cancel the original note and send it to the borrower by certified mail. Once again, giving instructions to his provider, American IRA, to perform the function. He's not going to do it himself. Now let's talk about some key points. The landscaper is not a prohibited person. He's not providing services to the IRA. He's not a son, a daughter. It's not a prohibited transaction. So it was not a prohibited transaction for David to make this loan. It was a nice, clean, simple transaction. And I point this out to you because when you're thinking about making a loan to somebody, before you go through all the process, just say, can I make the loan to them? And if you're unsure, call our office. Although, as I've mentioned before, we can't give you advice, but we can give you directions as to what is a prohibited transaction, because that is our area of expertise as it relates specifically to that transaction. And if it gets any deeper than that, of course, you'd have to get some legal input, because ultimately it's between you and your advisors as to whether or not you think it's a prohibited transaction. That's why it's important to have a good team. The loan was secured by the title to the home with the correct vesting and registered with the state to put a notice of lien on the title. What this does is it prevents the borrower from placing loans on the mobile home that are superior to the lien David made with his Roth IRA. These are little things, but they add up to a lot. Secure your interest. It's good, solid business, whether it's the IRA or otherwise. The collection of payments needs to comply with federal law and require an approved third-party servicing company. Now, I put this in here. I'm not going to go into this tonight. You need to be aware that when you're making loans on real estate, you're buying mortgages, or you are making loans on mobile homes, that in many circumstances, they're going to require a third-party servicer, and they're going to require you to limit yourself to the number of transactions, and it depends by whether it's owner-occupied or they're rental properties, and it's called the Safe Mortgage Act. You need to get familiar with that if you're going to be in the lending business, because there are some very specific requirements, and a lot of this has to do with what's come out of Washington the last few years in the Dodd-Frank rules and regulations, the way they're being implemented, not necessarily the way they were intended to be. It's always a slightly different version. So do check into this as to how it relates to your lending business, whether it's IRA-wise or whether it is by just your normal monies or your other type of entities that you may be dealing with to make loans out of. Oddly enough, in this secured loan, there were a lot of key points, and it is a very simple transaction. I made the key points there because I wanted to cover a lot of bases on A, that it relates to the IRA, and B, just good business. As it mentions, there are a majority of these are in fact good business. One thing that a potential IRA investor to remember is that the process is the same whether it's inside the IRA or outside the IRA. As I mentioned, the only difference is that American IRA signs the documents on behalf of your IRA, and all of the loan payments flow back to the IRA. With that in mind, as I've said before, this really is an easy process.